some time now, and also on the global stage, India has proudly showcased UPI as one of the world's greatest digital success stories. Today, more than 23 billion transactions happen every month. From buying vegetables to paying school fee, from roadside vendors to luxury stores, UPI has changed the way that India goes out there, lives, breathes, and pays. But could that free convenience soon come at a price? Well, that's the buzzword today. The centre has introduced an amendment in the parliament that could fundamentally change how UPI payments work. The proposed law removes the blanket prohibition on charging merchant discount rate or MDR on notified digital payment modes such as UPI and RuPay. Now, to be clear, the government has not imposed any charge yet. What it is seeking is the legal power to impose one in the future through a particular notification if it chooses. So, let us help break this down for all our viewers. What exactly is MDR? Merchant discount rate. It's a fee paid by businesses to banks, payment providers and the payments ecosystem for processing digital transactions. Before 2020, UPI and RuPay transactions attracted MDR, but the government waived it to accelerate digital adoption for a quick while. And that move helped make UPI virtually free for consumers and merchants alike. Everybody started using it. Today, India has become the world's largest real-time digital payments market. But maintaining this ecosystem also costs money. Banks, the payment companies and infrastructure providers have long argued that the current model is financially unsustainable a little bit, and the government appears to be looking at a middle path only because of that criticism. Industry sources suggest that if MDR returns, it may apply only to merchant transactions, that to above 2,000 rupees. Officials say nearly 95% of UPI transactions are below that threshold of 2,000 rupees, whilst the remaining 5% account for almost 65 to 75% of the total transaction value. So the debate is no longer just about a small transaction fee. It's also about whether 2,000 rupee limit is the right benchmark for this, whether the government is being smart, and what does this mean for you essentially? It's about who should pay for India's digital payments revolution. Should banks and payment companies continue absorbing the cost? Should large merchants contribute, or will the burden eventually find its way to consumers through higher prices? And if India starts charging for UPI, will it slow down digital adoption or simply create a more sustainable payments ecosystem? Tonight, we're going to try to separate the headlines from the reality and ask whether this is a necessary correction or the beginning of the end of truly free digital payments. Professor Bijon Misra, consumer affair expert, with us on the broadcast. Many thanks, Professor. And Mitali Nikore, founder and chief economist, Nikore Associates. Many thanks, Mitali, for taking out the time again. I was understanding myself, wasn't really good in economics, during my 12th grade, was trying to understand what is MDR, what does it mean for the consumer out there. Essentially, if you buy, let's say, an electronic appliance for about 50,000 rupees, and there is a said MDR that is to be paid on that, for the, for example, let's just take 0.03% MDR, then about 150 rupees goes towards the bank or the payment processor or the NPCI or the ecosystem, all of that collectively, but the customer still pays 50,000 rupees, if I'm not wrong. Can you help the viewers understand what is this MDR? Or this zero MDR policy, is it really financially unsustainable? And what are we looking at the moment?
So thanks a lot. And I know this can be a lot of jargon and it can be, very confusing for people. So let's try to simplify.
Yes, please. Yes, please.
So what has been happening so far is we have cash, right? Cash is our default mode of payment before UPI came into our lives. And at that time, everyone thinks cash is basically free. There is no actual, cost to us of using cash. So now, when you have to switch a person from one mode of payment to another mode of payment, and cash is already free, then your other mode of payment should also be free, right? Because when we use a credit card for payment, for example, that costs us something because we have to pay our credit card charges, and we also have to sometimes pay a fee for having a credit card. But credit card companies also try to entice us, right? By giving us rewards, by giving us points, miles, etc. Now, the MDR being waived off at that time was a way of attracting consumers towards using UPI. Now, but 10 years later almost, the situation is totally different. Today, UPI is our default mode of payment. Many of us don't carry cash anymore. Even the smallest transactions, at a thela wala or a kirana store across the country are happening with this QR code from people's mobiles. So, what do you actually see? In that situation, the cost of delivering UPI, that is now something that companies are saying, look, we've borne this cost for almost 10 years. We've had some subsidies from the government for about 5 to 6 years of that time. But now that cost is increasing, and also we no longer have to push consumers to actually, do this transaction. They are going to do it anyway. So now we can come in and at least on the transactions which are high value, apply a certain MDR so as to recoup our costs.
Okay. I'm also being told that Professor Misra has gone a little bit AWOL. I'm absolutely fine with that because that gives us more time with Mithali here. Mithali, so basically, when we're asking this question, whether this is the end of the free UPI era, the answer to that is no, because it wasn't free, quote unquote, to begin with in the first place. There is a processing fee that is, going behind the doors. Who ultimately bears the MDR in the long run then, Mithali? Because consumers out there are going to be worried whether this product that's costing us 60,000 rupees is going to be costing us a little bit more than the 60,000 rupees that the MRP is. Help us navigate that particular question.
So at this point in time, I think the proposal that has been brought in is to, levy the MDR on the merchant, not on the consumer. So, like, say, for example, I come to your store and I want to buy a sari from you, which is my favorite example and scenario because, we're talking about saris. And at the end of the day, you say that I'm going to charge you a small fee, 50 rupees for using this particular payment mode as opposed to if you gave me cash. That is what is meant by MDR. The merchant is the person who will be, bearing that cost. I will not get that 50 rupees charge on my bill. So it's always going to be at the back end where the merchant has to pay the UPI provider. That could be Bheem, that could be Google Pay, that could be Amazon, whichever UPI provider the merchant is choosing to have.
Okay, and what about this, the limit on, all the transactions above the 2,000 rupee figure, because 95% of the transactions happen below this figure, but that 5% makes up 65 to 70% of the entire transaction money and the value. So has the government played its cards real smart here, or are we, not reading the fine print?
No, I don't think it's. I mean, this is not more about about the fine print. This is actually just a very smart way of targeting, because the person on an if you're doing a 2,000 rupee transaction, or say a 1,000 rupee transaction, and you have to pay 1% on that, that's what? That's 10 rupees, right? That's a very small amount. But you do a 1 lakh transaction on UPI and then you have to pay a 1% on that as the MDR. That's a big amount of money.
Yeah.
So at the end of the day, with fewer transactions, fewer processing cost, lower processing cost, lower cost of actually collecting that amount, you can collect a much larger amount when the MDR is levied on higher value transactions. It's fewer number of transactions impacted, fewer number of merchants impacted, because see, even when we are talking about merchants, we are talking about MSME. We are not talking about large industry here.
Yeah.
The people, the merchants who have to pay this fees are your local sabji wala, your local kirana wala, your shopkeeper, your shop owner, some, the car repair salesperson. So, it's these kind of people who would have to bear the MDR. So they are also not very big, very big retail outlets out there. They are also MSMEs. So for them also it's easier if they only pay the MDR on large transactions and not on small transactions.
So just to understand this better, could this also drive up, costs of our groceries, costs of what's, being sold at, the local shops out there, considering they're the ones that are going to have to do with this, this transaction? Because, the big fish, the big players, they're not necessarily worried about that 1%, but it's the small vendors. So firstly, answer that. And of course, essential and small businesses, should they be receiving a little bit more protection from any kind of MDR?
See, I'm just a little bit worried because this might just have a deterrent on the usage of UPI altogether. Because a lot of people might say that, oh, acha, I have to do a transaction of 5,000. Here you take cash.
Yeah.
I don't want to give you UPI for this because you'll have to pay. Or the merchant themselves might say, to the customer and say, like if you give me this in cash, then there will be no 5% charge. Otherwise, I'll have to put a 5% charge on you. So then, we're basically veering towards an economy where people might, say, let's not use UPI. So I think that is a possibility. But I also think that UPI companies and merchants themselves are aware of consumer behavior. They themselves are aware that this would be a disincentive. So I think what has happened today is simply the removal of a regulation. It does not mean that the charges have been applied.
Yeah, that's right. That's right. It's just that, the government is seeking this power so that they can notify this, somewhere in the future if they want to. So you're saying that the one, threat possibility is that the digital payment growth setup could slow down. But the other angle is that we've been so habitual with scanning QRs these days. Everything happens on a QR code. Biodatas and CVs are being given ahead with QR codes. Pretty much everything happens on a QR code. We're so habitual that maybe that behavior, there's going to be less deterrence on that particular front. What's your take on that?
No, absolutely. I think, see, small transactions for sure, under 2,000, absolutely, I don't see any impact. I think, and which is 90% of transactions in any case. So it's not as though, its UPI usage is going away. It's simply to say, what happens to the larger transactions? Is it that they go back to cash? Is it that they go back to credit cards, for example? And they might say, okay, if I have to anyway pay this 5% extra, might as well use my credit card to make this payment and at least get some miles or points on along the way. So even those are calculations that a consumer or even a merchant might make, at the end of the day. So I think the pricing of how this MDR is placed has to be very competitive vis-a-vis the credit card option as well, because even credit card firms are charging you something, right, for the entire credit card machine, etc. So we have to ensure that there's a competitive advantage vis-a-vis the credit card company charges.
Okay. All right. My final question to you here, Mithali. Of course, no charge has been applied yet. There is no figure out there. But if this were to happen, who would be the biggest benefactor? Of course, it is going to be the payments corporation as well. It is going to be the banks. But what about the consumer in all of that equation? Is the consumer really at a loss with this?
See, in the beginning, probably not. Because in the beginning, they will probably not pass it on. It's only, I personally feel, the larger firms will definitely never pass it on. But it is literally a very small minority of retailers who will not be able to bear that charge, for whom the working capital is so constrained. They are the ones who are more likely to pass on that charge. And in that situation also, I personally believe that the retailer and the consumer might come to a point where they say, let us actually do this transaction with another mode, like cash or credit card or anything else. So, we know Indians and we know Jugaad. So the Jugaad might just end up ruling.
Well, many thanks, Mithali, for taking out the time. UPI has transformed the way India pays by making digital transactions simple, seamless, and virtually free. Now, The question is whether that model can remain sustainable, and there are several options that the merchant will have, and there is no charge that has been levied as of now. But the question is whether that model remains sustainable or whether someone somewhere eventually has to pay or foot that particular bill. Mitali Nikore with us here. Many thanks, Mitali, for taking out the time.
Thank you.
All right, then, shifting our focus here. This one is about your health. We've spoken about insurance. We've spoken about your commute. We've spoken about what it means for your wallet. And now let's throw some light on what this segment could also bring to light in terms of how you can better keep yourselves healthy. We're turning to a health story that's becoming impossible to ignore. And why I say that is because for a very long time, weight loss, it meant diets, it meant exercise, HIIT, all those disciplines out there. But today, a new class of medicines has completely